Alright guys, so in this video I want to explain why I want to invest in silver, when I'm going to invest in silver, and I want to do a very deep Wyckoff analysis because I know a lot of people know that I trade Wyckoff. I know a lot of people are interested in how Wyckoff trades, so that's why I want to make this video. So if you are not familiar with Wyckoff, let me get this picture over here. I will explain it very briefly. You basically have four phases: the accumulation phase, the markup phase, the distribution phase, and the markdown phase, which is a downtrend. Before a new trend starts, so will in most of the cases be a range, because a bigger player needs to accumulate a position. He can't just enter an order like a retail trader does or a retail investor does. He has to scale in and build a position because of liquidity purposes, because of slippage, because of drawdowns, and because that's the best way to profit for someone with a lot of capital. So you will see these ranges just before an uptrend, and you will see these ranges just before a downtrend, and during an uptrend you will see small ranges where supply and demand is being absorbed, and they're scaled out and there's built new positions. But that's basically what happens in every market. And as you can see on the silver chart, this is a very clear accumulation range, and it took years to build, but we've finally broken out of it in 2020. I want to really go deep into this trading range, but let me first highlight what I'm talking about. This is the trading range. This is an accumulation range. So let's dive into the chart. First of all, as you can see, there was a very strong downtrend before the accumulation range happens. And according to the Wyckoff method, you want to analyze changes in a trend. So the first area of interest to me is this on the chart, because as you can see, there was some support over here and there was some movement to the upside, which became smaller and smaller, but a strong downtrend after this level broke, and then we got some up and down movement. So to me, this is the PS. That's not the right picture. This is the PS, preliminary support over here, and that's basically the last point of support before an actual range is going to form, and it's usually a very decent support, as we see on the chart over here. It's a very decent support, and you will see some up and down movements, and that's exactly what happened over here. So I'm going to highlight that part as the preliminary support. Then we get another leg to the downside, and this is the selling climax. And the selling climax is very important because before a selling climax, you see strong move to the downside, which you can see over here, and then you see some form of aggressive rejection. In this case, the rejection wasn't really that aggressive, but as you can see, the candle rejected quite firmly. And then we got another test of this level, and then we got something very, very interesting, because this move to the upside is what we call a change of character. And what's a change of character? A change of character is a change of behavior in the market. This was the downtrend, and as you can see, we got a bit of retracement here, but look at this one. It's way stronger, it takes way longer, it's aggressive, big green candles closing near the high of the candle every single time. If you look here, closing near the high, closing near the high. So this very bullish behavior, and that's something I want to see in the beginning of a trading range. So I want to see the downtrend stop, which happens at the selling climax, also called stopping action. Then there's usually a secondary test of the selling climax, which happened over here. And then I want to see the change of character, which is very obvious, which is this move. So that really piques my interest. So if I'm going to fill in the other parts of the accumulation range, this is your secondary test. And this is your AR, your automatic reaction, and also the change of character. So if we go back to the picture of the Wyckoff, this is phase A. Let me put a line here. Phase A of the accumulation range. Then, according to the picture, and what also happens here is you see a lot of up and down movement, and you see at the end of phase B, you see that the up and down movements become smaller, which is also exactly what's happening over here. As you can see in the beginning of the range, the moves are aggressive, and then during phase B, you still see this up and down movement, but it's not as aggressive as in the beginning, and that's very important, and that's really where a position is being built by a bigger player. So let me put in phase B. During phase B, you often get some tests of the lower part of the range of the selling climax level and the secondary test level, which are called STBs, so secondary tests in phase B, which is something worth noting. I'm also going to draw in the lower part of the range and the higher part of the range, which is also very important, and it's something you need to do when you are analyzing these ranges, because you want to see what happens at the boundaries of the ranges. All right, that's phase B. Phase C, the spring, also known as a false breakout, a swing failure pattern, a liquidity grab, whatever you want to call it. Its main purpose is to trick weak hands into selling and to trigger liquidity, to trigger sell side liquidity, I have to say, because people will be selling through this level as it breaks. People will have the stop losses below this level. And that's all, these are all sell orders. So once these sell orders get hit, the bigger player that wants to be long, that has been accumulating in this range, can buy at a lower price because there's enough liquidity. And that's the main purpose of a spring. After you see a spring, you want to see one thing, and that's another change of character. So another strong move to the upside, which is exactly what happens over here, and you get a very strong breakout of the range. So that's very telling, and that's my phase C over here. Jesus, phase C. So if you're familiar with my stuff and where I enter, it's always in phase D, which is where we are now. This is phase D, and I'm not sure how long it's going to take, but this is phase D. And during phase D, you often see some range forming just after the breakout of the previous range. And then you will see the next leg to the upside, which is also what I'm expecting. I'm really bullish on silver and the other metals. Gold has already moved, but silver is still very much behind. I do expect a new all-time high, or at least hit this blue box. So I'm going to invest in silver quite a lot. A big part of my portfolio, I'd say around 10% or so, is going in silver, and I'm going to scale in. Because if you are familiar with Wyckoff, you know that usually a few things happen. This is phase D, and as you can see, it's now building the range, which is around here, which is after the sign of strength. And the sign of strength is the breakout out of the range, which we've already seen. And one of the important things after an accumulation range is this. There's often a retest of this level before taking off to the upside. And that level is, in my mind, this level. So let me draw it in the chart to make it a bit clearer. So this is the high of the range, the blue line, but usually you will get a retest of this level, the lower one. So I want to be a buyer at around $19, but I also am very bullish. So I'm going to be scaling in some long positions in this area because these retests don't always happen, but I'm very, very bullish because of the fundamentals regarding the US dollar and the global economy, but also because of this very obvious accumulation range. So I'm very bullish and I don't want to miss this move just because I want to get a better entry. So I will be looking for entries around the high of the range, which is 21s, the blue box, which is around 19, but I'm also going to scale in a part of my position at this range in phase D. And that's how I'm going to attack this pair. I'm not going to trade it via a broker like a CFD's broker, a spot broker, because this is a spot price. But I'm going to invest it by getting an ETF which follows physical silver, or maybe buy some physical silver myself at different prices. But that's how I'm going to attack it. I'm going to hold it for years and years to come, past the $50 mark. But this is the first target I am expecting. Also, if we look at the left, we just broke this very important level. So I'm very, very bullish. I do expect a move to the downside to at least the range high. So that's where the majority of my order will be. But as I said before, I will be scaling in phase D to hold for an entire phase E. I do expect some reaccumulation ranges during the uptrend, but it's totally fine as I'm in for the long run. But this is how I'm going to attack this silver, and I hope you guys learned a lot from it. I hope you guys learned a bit more about Wyckoff and accumulation. And yeah, I hope to see you guys in the next video.